opening. It's slowly opening right now. Welcome everybody.
There.
Yeah, welcome everybody. I apologize we're late. We've had some difficulties. There's two owners and we were trying to reach the second owner. We've just had difficulties, but let's get started. So we have SwingTree with us on the phone. They do both trusts and foundations. And we have Laron with us. He's one of the owners of SwingTree. And then we have two guest parties that are going to ask questions to, make this to get a lot of questions out and try to think of additional questions and get a lot of questions answered. So I would like to introduce Laron with SwingTree Trust, and he can tell you the different types of structures he creates and give you some details. Hi, Laron. Welcome. Thank you for joining.
Hey, thanks for the invite. I appreciate being here. Let's see. I guess I can start. My name is Laron Green. I run SwingTree Trust. I've been doing this for about 7 years now. I partner up with Tony Franklin with LNG, and he's my mentor, and he handles a lot of the foundations, and I specialize in the trust aspect with our company. And Jeff, I know you guys have some questions. I listened to your YouTube last week when you were talking about the trust and some of the benefits of it, and I guess I can answer some of the questions for you. I know one of the things was if a trust or foundation, do they have to pay taxes quarterly or at the end of the year? And the way that we set ours up to where a lot of our clients just pay their whatever taxes that are due annually. And what I mean by that is our private family foundations that we set up have a letter of acceptance from the IRS of a 501c3. So they're tax exempt. Now, some of our trusts, like one of my trusts that I run is a business trust. And since my company, since what I do, I have to maintain a state license, I do run one of my trusts as a partner with the LLC. So with that one, I run all of my quarterly filings through my LLC, but if anything is owed with the trust, it would be annually. But the difference between a trust and most other entities is the way that we set ours up is able to pass all of this taxable liability onto a beneficiary. So if there's any taxes or any income or anything that's left over after we take our deductions with our trust, we're able to pass those liabilities onto a beneficiary, which could be another trust or a private family foundation, which has a 501c3.
Okay, thank you. There's one of the, I- so there's a lot of us invested in this, and I've had quite a few different investors approach me that have reached out to you or some of these. There's a couple of different groups that created like trust businesses to cater to dinar investors
Hmm.
within this investment, and
Okay.
and some of the things that just different dinar investors reaching out to consult and try to get a trust, getting knowledge and research, setting up a trust through these companies. Some of the things that they've been told is that with the dinar that they have to set up the trust structure to prior to before the currency of the before the value of the currency can actually change. Okay, that doesn't sound
Hmm.
accurate. It's I mean, correct me if I'm wrong, but the value of the currency is irrelevant as long as you haven't physically exchanged it prior to setting up your trust. Then you're okay. So I mean, you can set up your trust or foundation structure at any time, just as long as you have not exchanged it prior to your structure and having your checking account and your EIN number having your structure fully set up. Is that correct?
Yes, because the way that we set our trusts up, and our trusts are not statutory trusts. So the rules may be a little bit different. They're not under any state law. So our trust was set up under contract law, which is a whole different set of rules. Now, if you were to take the dinar, you can add it to your trust that we set up as a asset. So it's not even like you. So it would just sit there as an asset until you're ready to exchange it, or you can add it as a asset, and then once it revalues, then you can go ahead and exchange it.
Okay. Okay, thank you. Perfect.
hmm
So, let's get Trinity, and we have two kind of guest questioners on the phone. We have Trinity and Damon. I'd like to introduce them. Welcome, guys. Thank you for joining, and they've got a list of questions they would like to ask you. Welcome, guys.
Hey, thank you, Jeff.
Thank
Hello.
you. Thank you for having me. Could you kind of give me the difference? Do you have to have a trust, or could you have an LLC, or could it be beneficial to have both?
I think it just depends. If you're running a business, like I said, my personal business is a business where I have to hold a state license. So that's why I have an LLC. But we have
hmm
several clients that just run their businesses through a trust because they don't have to hold any type of state license and they don't have any employees.
Right, right. I understand that.
Okay. Let's see. I think Tony's my business partner is trying to get on some type of way, and I don't know how. I just got a text message from him that he's trying to log on. I don't know if he's able to. But in the meanwhile, while we're trying to figure that out, Damien, did you have any questions?
Yes, yes, I do. Um, the Private Family Foundation is a 501c3. Do you create any family trusts that are also 501c3s?
No, the way up until maybe 5 or 6 years ago, I know they made a change to where our private family charitable trusts are not tax exempt. So it does not have that letter of acceptance. So that's why we use a private family foundation. It gives you way more latitude anyway. So
Okay,
we work with those now. But like me, I still have my charitable trust and I have my family trust. But the structure works best with a 501c3 that we use with our private family foundations.
okay. And are there, as I'm thinking that there are like superior benefits over a family trust by having a private family foundation. There's just more benefits. But are there any benefits to choosing a trust versus a private family foundation?
Oh, definitely, definitely. Like I said, with the trust, it can hold currency, even American dollars, in it as an asset. So once and it's not too many vehicles that or business structures that you could hold cash in it as a asset and not be taxed on it to a certain extent. So that's one of the benefits. And like I said, you can pass all of your taxable liability from a trust onto the beneficiary the way that we write ours up.
Okay. So what exactly does that mean, passing it on to the beneficiary? Do they pay the taxes
Yes,
and the
yes,
liability?
yes. You could pass it on to another person or you can pass it on to another trust.
Okay. Can you pass
And
it
that
on to another private family foundation?
exactly, yes, you can.
So that
And
brings up,
how does that work? Because it's a 501c3. So how does that work?
Well, 501c3, it can be a beneficiary of your trust. And the trust can pass its taxable liability onto its beneficiary. And you can accept that as the trustee of the foundation. You can accept that income into the foundation and use it for whatever you deem to be for the good of the community, whatever charitable aspect you want to do with it. that reflects for the good of the community.
So
Okay.
does the foundation give you more control about where it goes than a trust, or are they about the same?
Well, they're not the same. They're both used to. Well, let me put it this way: the private family foundation, that is a charitable trust. I mean, that is a charitable organization. But the way
Okay.
we write it up is whatever you deem to be charity is charity. You know, a lot of the statutory family foundations. Okay, let me give you this example. One of my clients, he was setting up a private family foundation through his attorney, and he wanted to help the homeless out, which is fine. But every dollar that would be donated to his private family foundation will only have to benefit the homeless. So if he wanted to change his mind and do something for orphans or the environment, he could not through that. So it would kind of handcuff him and tie his hands on that. So the way we set ours up, you can help the homeless 1 month. Next week, you can help orphans. Next week, you can help the environment. Or if you want to invest in another company, a for-profit company, you can own up to 20% of a for-profit company. It can make investments in other companies. It can loan money out to other companies also. So it gives you a little bit more latitude than a statutory foundation would.
And Laron, could you go over what is a high asset trust?
Well, we use a system of interrelating trust. So a trust, like a person, can be it can be sued. If, for instance, my primary residence would be held with my private family trust. Now, I wouldn't put my private residence and also a vehicle and a rental property underneath my family trust, because if I rent out that rental and someone slips and they break their leg and they want to sue the owner of that rental property, my private family trust is the owner. So they can sue that trust and acquire all the assets, which would be my family residence and a vehicle or whatever income that I have stashed in there as assets. So in those type of situations, like one of my clients has a trucking company. We put his trucks in different high risk asset trusts. That way, in case of one of his drivers gets in a wreck and hurts somebody, that person's going to want to sue the owner of that truck. Well, the owner of that truck is a trust. It's a high asset trust. And the only assets that are inside of that trust are the truck itself and a insurance policy.
Yeah.
So there's no other assets or nothing else for them to acquire in litigation. It stops right there. They can't go after the company or my client personally because he doesn't own that truck. You know, his business leases that truck from that high-risk asset trust.
Okay. And should this high asset trust stand on its own, or can I, like, say, because I'm interested in some rental properties, maybe an Airbnb, I want to put all of these in separate high asset
Exactly. That's exactly
so
what we suggest.
Yeah. So can I umbrella all of these under my private family foundation or my family trust, or should I just leave them separate standing as high asset trust?
Yeah, I wouldn't umbrella them underneath your private family foundation. That would be underneath what we call a business trust. We would set up a special trust that you run businesses out of, and the beneficiary of the business trust would be your high risk asset trust. That way, in case your rental property needed, like I said, there's nothing but capital in order to run that run that rental property inside of that trust for your Airbnb. But if you needed to put a new roof on it or something like that, then you would be able to go to your business trust and generate those funds to take care of its beneficiary, which would be that high risk asset trust that you're holding that Airbnb in.
Okay. So I umbrella that under the business trust. Okay.
Exactly, and that's what we do. We structure everything for you. We hold your hand for a whole entire year. We even after that year, we give you ongoing education on how to run and how to live with these type of structures. It's nothing that you just learn overnight. You know, the families that have been successful running these structures for decades and centuries, you know, they teach it to their kids, and they, you know, it's not like a quick lesson. It's a lifelong study of how to do these structures. But all of the successful families that we know of today, Rockefellers, the Rothschilds, the Bill and Melinda Gates Foundation, the Kennedys, they're all set up with structures very similar to what we use.
Right. And I'm glad you brought that up, because my other question leading into that was, is there a membership structure to your company or a subscription-based service by the company? Because I was thinking after, you know.
Tony's, after, like I said, after we structure you, we hold your hand, we get you set up for a year. And the reason why we hold your hand and we're there for a year, because that gives you 1 year of education with us in all of your taxes and everything filed, and it gives you through a whole entire fiscal year. So after that, we're always still on call. If you have any questions, we rather our clients call us and consult with us before going out on their own, because it's easier for us to answer a quick question over the phone rather than trying to go in there and untangle something. We try to make sure everybody's constantly compliant. We'll set you up with a CPA if you don't already have one. And, well, you know, most people would already have a CPA, but they're not familiar with this structure. So what we would do is set you up with one of our CPAs for the first year, and then you can continue that relationship with that CPA, or you could take what that CPA has done for you and bring it back to your CPA so they can kind of see how the structure works. And then they can continue to do the filings for you.
Okay.
How does this work with different states and different taxes?
Oh, excellent question. It works with different states. Like I said, the way we write ours up, it's not underneath statutory law. So what that means is it's not under any state jurisdiction. We write ours up underneath contract law. And as we know, when you write contract, you write the law. We all seen Judge Judy. Any type of issue inside of her courtroom, the first thing she asks for is, let me see the contract. And the reason why she wants to see the contract is the law is there in the contract, and she needs to see, pertaining to that contract, who broke the law. So the way we write ours up, we can use ours internationally. They're not just they're set up to work internationally. So if I set up a trust, if I'm a lawyer and I set up a trust in the state of New York or Wyoming or Texas or Nevada, then it's written underneath the laws and rules for that state. If I try to take my same business and go to China or go to Indonesia or Mexico or Dubai and do business, they're not going to recognize Nevada law or Wyoming law or California law, because they're not underneath that jurisdiction. So we write ours up a little bit different to where our clients don't have to worry about that.
Okay. So in building this comprehensive knowledge on these entities and perhaps even, you know, further opportunities that may be associated with trust and private family foundations, do you guys support any ongoing conferences or meetings or Zoom calls on a quarterly, annual, or, you know, even a monthly basis?
Yeah, we have a quarterly meeting that we've ran for the last 7 years down in Dallas, Texas. So every quarter, you know, minus the COVID restrictions that we fell under last year, But every quarter
Mm-hmm.
we have a conference in Dallas, and all are welcome. Um, it's a 2-day conference, real comprehensive. We bring in tax professionals, we bring in our foundation professionals, we bring in all different types of people inside of this industry, and everyone presents, and then we do a question and answer. And we make sure everyone in that conference leaves with all their questions answered or whatever documents they need interpreted. We're there for them. And we also, LMG just set up through Teachable. They're releasing it, I believe Tony's releasing it early April, to where via Teachable, you'll have access to a full library of everything that you would need to know to be able to run a trust or foundation, all the questions and answers. And then with that, I believe he'll do a monthly question and answer conference call on that platform.
Okay. Nice.
So, in short, once we set somebody up, we're not leaving them out there to figure it out. Like most CPAs and accountants and lawyers, when they're setting someone up, they're setting someone up underneath a statute entity, which most of us are familiar with. If you're going to open up a business or a bank account, you need a Social Security number, an EIN number, or a LLC, and that's just how it is underneath statutory laws and stuff. So that's what most CPAs and attorneys are familiar with. That's why when we structure you, we set you up with a CPA, and we'll even conference with your CPA and work with them to where they understand the structure. Nothing is foreign that we're using. We take everyone to the IRS website and we walk them through everything step by step.
So this does not require an EIN?
Yes, all of our trusts do require EIN. We provide those for you.
Thank you. How long does it take to set one up?
From start to finish for a trust, it takes about 10 business days before you have all the paperwork you need to go ahead and go to the bank and open up your accounts and get everything situated. Now, for a private family foundation, it takes a little bit longer. I think that takes up to, you'll have all your paperwork ready to go within 2 weeks, but I think you have to have that up and running for a month before we send out for your tax exempt status from the IRS, because they just want to make sure you're up and running before they issue that letter. So,
and what constitutes up and running?
That you have your bank account established. Now, from the day that we set you up and you receive your paperwork, you can retroactively go back. Now, this is Tony's specialty, so I don't want to talk too far out of my comfort zone with that, but I do know from the time that we set you up, even before you get your letter of acceptance, you can operate as a tax exempt organization, because once you do receive that letter, it goes from not the moment that you get it in your hands, but from the moment that you opened up the entity that we established your entity for you. Okay.
So within 2 weeks, okay.
Yeah.
And generalized paperwork would consist of?
Well, a private family foundation has to file a 990 PF annually, and that's where you report everything. That's where your CPA would just kind of list what all money has came in, what money has been spent out. Because with a private family foundation, you have what's called a 5% expenditure rule, and that 5% can be spent on anything. Hypothetically, if you had $100,000 in your private family foundation, you're required to spend $5,000 of that. Now, that $5,000 can be spent on operating costs for the foundation. If you're going to take a trip to Mexico or Canada for a conference pertaining to your foundation, and that would be included in that. The money that you would spend on that first year opening up your foundation can be attributed to that 5%. If you have a helper, a receptionist, or someone doing your tax filings for you, and you pay them, that can be attributed to that 5%. So that 5% is very, very easy to meet. Nobody has any issues spending 5% of their foundation holdings.
Okay.
To stay compliant.
So the option to spend it is flexible.
Yeah. You just can't leave $100,000 in there. You have to spend 5% of it.
Okay. At the end of the year.
Throughout the year, it just has to be accounted for by the end of the year. Yes.
Okay.
And everyone's situation is a little bit different. Some people operate with private family foundations. Some people just operate with a few interrelating trusts. So it just depends on what that person's needs are. And some people may need a high risk asset trust, and other people may not. So what we do is we like to evaluate everybody as an individual. We do an intake form that's on the SwingTree Trust website, and that gives us an idea, kind of a snapshot of where you're at. It doesn't ask for any personal information. We're just going for multiple choice, just so we can get an understanding of where you're at. Then we can kind of show you, okay, this is a structure of trusts or foundations, and this is how we would set it up for you, and this is how you would live with inside of it, and take care of your family inside of it, and run a business through it.
Okay. And this form, is it on your website, or do we contact you via email? How do we get access to this form?
You can contact me via the email that's on the site, but I do have it on the swingtreetrust.com website, to where you can just go and download all the forms that you need.
So that was going to be my question. So if we choose to do a foundation, then we go to the SwingTree site, and that's how we contact you to let you know that we are interested in this?
Yes. All my contact information is on there. So you can give me a call, send me an email, and usually it takes me, if you leave a message, I'll get back to you the next day. If I'm not available immediately when someone calls, I usually return emails within a 24-hour period.
Okay. This is just for a ha-ha. This is a funny. But you know how girls always go to the bathroom together? We go together?
Yes.
There's a number of women out here that are denarians, that are single, that tend to go together for things. So what if a group contacted you? I know you would do it individually, but would you accept a group coming together and meeting with you?
Oh, yeah, we work with groups all the time. We can either have a face-to-face at our conference in Dallas, or we could do a group Zoom call with everyone. That way, everyone can get their questions answered. There's more opportunity to ask questions and get answers. If you're in your group, or, you may feel more comfortable asking questions around your peers. Or, some people, they may want to just sit back and listen, and then contact us individually to ask more personal questions. Or, we've even done conference calls to where someone wants to have their CPA or their attorney on the call with us, and we'll take those calls and answer all the questions for them also. We try to walk everybody through our structures to where everybody's comfortable and they understand exactly how to live in them.
Wonderful. Thank you.
Okay. Yeah,
you're welcome. Yeah, we love groups, so the more the merrier.
Now, a lot of us cannot afford to do anything pre-reinstatement. Is that okay? I mean, preferably, I guess it would be better if we could have it done prior to, but what if we cannot?
Oh, of course. what the most important thing, the most valuable thing is just the knowledge that there's alternate ways of structuring your business, and this is key, your family. Like I was saying earlier, the Rockefellers, the Kennedys, these families, they've been structured like this for generations. And usually the patriarchs of these families were not born into wealth, but they did have the knowledge on how to generate and preserve and pass wealth on to the next generation. And that's all we're offering. Now, Tony, he's been working with, he's been in this industry for well over 20 years. And his background is corporate restructuring. So he's normally dealing with multi-million-dollar entities and families. Now, me, I'm a small business owner. I've owned a hair salon here in Kansas City, Missouri for the last 15 years, and I was getting killed on taxes. And then I ran into Tony, and he kind of showed me, like, well, you're paying, X amount of dollars to the IRS. You don't have to. It's just the way you're running your business that you're running into that. Rockefeller himself has a quote, own nothing, control everything. Now, what does that mean? That means the person who owns it bears all the responsibility and the tax burden for it. Now, the person who controls it doesn't have to bear all of that. They're just in control of it. Warren Buffett was famous for saying that he pays less taxes than his receptionist. How is that? We all know that he makes billions of dollars. How is his receptionist paying more in taxes than he is? Well, he knows how to structure himself. And this information has been here for hundreds of years. It just hasn't been accessible for the common salon owner until here within the last 10 or 15 years, to where Tony said, hey, I can show you guys how to do this. You don't need millions of dollars to it. Now, most of the attorneys that are qualified to write these structures up, they have $1 million clients. So why would they talk to a salon owner that could not afford to buy 1 hour of their time? That's a waste of their time. So it's always been there. It's just really never been offered to the common person. We're offering it to the common person. Now, you're saying that you can't afford. I can't really tell you the exact price. I would have to see how I could best structure something for you. But trust me, it doesn't take hundreds of thousands of dollars. It doesn't even take tens of thousands of dollars to get set up. And the way we set up a lot of our structures, you don't have to buy the whole structure at once. You can buy a piece of it and start to work the structure and benefit from it. I don't know if I'm exposing too much, but, I used to pay, I used to write the IRS a check for around $15,000 to a year. Some people, that's not that much. To me and my family, that was a headache every time I had to write that check to the IRS. But it was such a good feeling that first year that I structured myself. My CPA said, well, you only owe $5,000 this year. It went down from $15,000 to $5,000. Then after that, it went down to almost zero, to where, how much is that worth? My kids will be able to benefit from the way I structured my family over 7 years ago. Now, my grandkids following the structure, they'll be able to benefit from it also. There's nothing to repurchase. I already have everything set up. All I have to do is just make sure my kids know how to use it. I have it set up to where with our family trust, we have what's called a bloodline clause in it. That means if my daughter gets married, and her and her husband are benefiting from the trust and they decide to get a divorce, well, only my bloodline descendants can benefit from the trust, even if he was living off the trust with my daughter. If they split up, only my bloodline descendants can benefit from that trust. Now, so she can get married without a prenuptial agreement because it's already written inside of my documents with my trust, to where only my bloodline descendants. So only my daughter, her kids, and her kids' kids can benefit from whatever I set up. And this isn't something that I have to keep paying for year after year. So that initial investment up front will take care of generations.
Huge payoff on the end, on the backside.
Oh God, yeah. Like I said, for me running my business, normally writing that check to the IRS and not having to write that check to them, I could take that same money, reinvest it in my business, or do something charitable with it that
Mhm.
I choose. So that's a huge benefit right there. And I tell a lot of my clients, we can't afford not to,
Right. Right.
because that money is going to get spent some type of way. It's either you write that check to the IRS or you take yourself out of that situation just with this knowledge.
Yeah. Yeah, Trinity. I was thinking about Jeff's comment earlier and your question regarding, you know, affordability of these entities like right now. And my mindset was to exchange one note, pay for the entities to be established, your trust, your family foundation, your business trust, and all that. Okay. After you've paid for it, gift letter your currency to said entity that you want your currencies to go into. Once you've got the paperwork back for your entities that you will receive, you take that paperwork to the bank of your choice, open those bank accounts for those entities, and then after that, exchange your entire possession of currencies into whatever entity you want them to go into, be it your family trust, your business trust, your private family foundation. More likely, I would say your private family foundation because capital gains tax, right?
Mhm.
There's no capital gains tax. And
Right.
that's something that we would work with individuals on an individual basis. That's called strategizing. We would work on the whole entire strategy from point A to point B to where you know exactly what to do it and what session to do it in. And like I was saying up front, you don't have to buy the whole entire structure up front. You may not even need a whole structure, but it's nice
Mm-hmm.
to
Mhm.
get a little piece started at any point, whether it's a trust, business trust, or a private family foundation or high risk asset trust. But like I said, you don't need to do it. There's no high pressure of, oh, you got to do it now before the currency revalues. No, no. I
Right.
just say, it's just so many benefits in doing it when you're ready. Like if you are a W-2 wage earner, just by having a private family foundation that has the 501c letter of acceptance from the IRS, you can donate 30% of your W-2 income to your private family foundation. Now, what did you do by doing that? You reduce your own taxable liability from your job by 30% by doing that. Now, did you take that money and put it somewhere to where you can't touch it or you can't access it? No. You just took it out of one pocket, your right pocket, and put it into your left pocket. Because as a trustee, you still have control of that.
Mm. Yeah. Yeah, it's
That's
definitely a way to.
significant.
That is.
Hey, Laron,
Yeah.
there were a few questions posted
Yes,
I'd like
sir.
to see if we could ask you. So, one of our viewers asked, are assets deposited to your trust tax deductible?
Or assets deposited to the trust tax deductible. No, if you have a trust and you are a W-2 wage earner, you after taxes you can put cash inside of your trust as a asset, and it won't be taxed again because it's already taxed. But you cannot take income and put it directly into. You cannot take income due to you personally and put it inside of a trust to avoid paying taxes on it. If the trust itself generates income, then it can take all of its deductions and pass its taxable liability onto its beneficiaries. But you as a person cannot do that.
Okay. If you
I
were
hope
to,
that answers that question.
yeah, if you were to run a business just from a different angle, if you were to run a business and you had profits coming in and the profits, everything's done under the one of the trust or the foundation, and the profits come in and they go straight to that structure, is any of that tax deductible?
the way we set it up with is if you run a business and the income received by that business trust can be, I want to say this the right way because I'm not a CPA. I'm just telling you how I run my businesses. Income coming into my business trust is earned by my business trust. I'm able to take all the deductions due to the business, all of the overhead. If I have any workers that need to be paid or any benefits that need to be paid out, all that gets paid, and all that is a write-off, of course, because it's your overhead. You're not getting taxed on that. Anything left over, you would normally be taxed on that at a higher rate. I believe the rate is somewhere in the area of around 37%, which is way higher than what you would individually be taxed on it. But the difference is you can take that and pass it on to its beneficiary. Now, you as an individual cannot take your taxable liability and pass it on to your kids or another beneficiary, but a trust can. Now, if you pass that on to if your business trust is passing it on to its beneficiary, then that trust or that entity can take its deductions and if there's anything left over, pass it on to its beneficiary, which could be your private family foundation. They can accept that in as a charitable gift to the private family foundation. And like I said, we go over everything with one of our CPAs and your CPA if you would like, and we explain everything in detail. And like I said, everyone's situation in business is a little bit different. So we would want to make sure that we strategize with you individually to make sure that you're 100% compliant in whatever field that you're in.
Okay.
One more question. One of our viewers just asked, what is a reasonable salary for one who administers the assets of a foundation or trust?
That would be up to the trustees to determine. So if it's a trust that you manage as a trustee, then that's up to you to distinguish. We wouldn't. There's no set. There's no set law or wording inside of the contract that says you can only pay somebody this much for managing your trust. But you could add that to your minutes of the trust. Like if you want generations from now, the trustee to only make no more than 8% of the assets in the trust. That way, a future trustee can't take a huge salary and deplete the trust of all of its funds. Then yeah, you could write that into the minutes. But as of opening it up, you have total control as trustee of that.
Could you set it up to where you being the administrator or manager controller of one of the structures that it provides you some of the perks or benefits of owning it and managing it. It provides you a house to live in, pays for the utilities of the house or property, provides you a vehicle to drive,
yes,
pays for the gas, and by doing that, it lowers your personal individual expenses.
Exactly.
So
Great
it
question.
lowers
Yes.
it would actually lower your overall tax income bracket.
You're on call for the tour. The way we write it up is you're on call for the trust for 24 hours a day. So in doing so, you do get some benefits. Housing, clothing, food, travel is taken care of by the trust in return for you being on call for the trust. Because your one duty as trustee is to grow and maintain the trust by any means. So yes, you could. So the trust could pay you a salary that you personally would be taxed on, but also the trust can provide you an allowance for clothing, food, travel expenses. The trust could buy a house that you would not own, the trust would own, and you could live in it as benefit for running the trust. Yes, those are all options.
And then
And could the same be applied for the establishment of a private family foundation?
Yes, absolutely. I was looking at the 990 PF for the Bill and Melinda Foundation, and I don't have all the figures in front of me, but there were several people controlling that trust that are trustees of that trust, and they all make huge salaries off of that trust. So, they set that up to where I'm sure Warren Buffett, being one of the trustees, is making a nice salary by the Bill and Melinda Gates Private Family Foundation. And now that they're divorced, of course, we're not going to know all the ins and outs of their divorce, but we do know that they did split assets. I believe she opened up her own private family foundation, and I'm sure some of the benefits of the Bill and Melinda Gates Foundation were funneled into her foundation. And I doubt if there were any capital gains or tax payments or consequences for doing that. And it was all done in private. We'll have a hard time figuring out who got paid what or what got confiscated in the divorce. I'm sure it was all just them sitting down at the table saying, this is yours, this is mine, and this is how we're going to split it.
We had one more question. This is a little different. It's kind of ventured out, but what the individual's asking, it says if a dinar investor were to exchange roughly $1 million dinar, and let's say the rate was $3, so that'd be basically a value of about $3 million worth of foreign currency at that point. And if they were to exchange that much, how much of that can be taken as a deduction on a Schedule A for taxes?
That is a question that a CPA would have to answer for you. Like I said at the beginning, Tony, his specialty is dealing with the private family foundations. I can answer some of the questions, but to really dig deep down in there, I would have really liked to have had him on the call. But due to technical difficulties, we weren't able to patch him into this call. But if you send me that, I can pass it on to him, and we can come up with a response for that to answer that for you.
Do any of our guests have any more questions? Trinity, Damon?
No, I'm good. Thank you.
Okay. Well, I'd like to thank everyone for joining. So on the home screen here, I've got SwingTree Trust. You can fill out information. You can submit it to them. Here's the contact information. If you click in the upper right corner, you can fill out the form, submit it. They're based out of Kansas City, Missouri, but that's not an issue. They can help anyone, anywhere within the United States. They have their phone number, their email. Again, Laron is one of the owners. He's more than willing to reach out and help you with any question you may have. And this would definitely be great because they do both trusts and foundations. So you can set that foundation up at any time. Just make sure you have your foundation in place simply before you go to exchange your foreign currency, and it's not a problem to cash out one or two notes to fund the cost of your structure if you have to do so. Most of us will have to do that. Thanks again, everybody, for joining. And I'm going to post the URL for SwingTree Trust below the video, down in like the detail areas right below the title of this video. Thanks again for joining.